Hey, good morning, everybody. It's Monday, May 11th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products for helping my originator friends get more business in 2026. Products like Originator Success, Grab and Go Social, and Rate Sensei. You could say they sponsor the show, so go check them out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasted to you on Facebook and on YouTube. You can go ahead and be sure to join me. If you are here this morning, say good morning. If you're watching on the replay, do me a favor. Give me a hashtag replay in the comments. Let me know that you were here. Let Facebook and YouTube know that you were here as well. If you would like to make sure you get a text reminder so you don't miss a moment of the show, you can sign up for a text reminder at hmmr.io/reminder or use this cool QR code over here. Stick with me. I'm going to move the camera a little bit. There we go. All right. So you can either... That's done. Well, we'll make it work. Anyway, so sign up, get a reminder. It's text alert. I just saw it go out. Also, you can sign up for our daily email lock advice, www. There we go. .ratelockadvice.com. That's www.ratelockadvice.com and get an email to your inbox each and every weekday morning. Or you could get our cool text alerts at www.ratetextalerts.com as well. Those are a whopping $7 a month. So anyway, enough of that. Let's go ahead and get to the rest of the good stuff. We'll go ahead and recognize this. I had all the live folks here this morning. Michael Garcia, Mallory Fotiadas, good morning. Sean Segalov, how are you? Holly Johnson, Deb Dickinson, Michelle Schumacher, Kathy Jensen. Good morning, all. Hope you all are having a fantastic day. Let's go ahead and jump in and get started. We will start off. Let me bounce over to the technicals, and we will get going on that. So we will go ahead and start off with the technicals this morning. Take a look at where we're at, where things are going, what all this beautiful, beautiful stuff looks like. We got Presentify here. You'll see right now, mortgage-backed securities. We're currently down about 23 basis points on the day. Not what we want to see. Let's zoom in on this. Probably going to have to refresh it. Yeah, hold on a second. Let me refresh this. All right. So taking a look here this morning, you could see mortgage-backed securities. We're down about 23 basis points on the day, basically giving up everything we got on Friday. If we look over here on the left side of the screen at the Japanese candlestick chart, this red day here was Thursday. You'll notice we ended the day at 98.64, right here at 98.64. Right now we're at 98.66. It's about the same. So basically, this green candlestick of improvement where things got a little bit better on Friday, we basically gave up Friday's gains. If you're looking at rate sheets this morning, rate sheet's going to be a little bit worse than what we saw on Friday. So we've been right at this 6.44-ish area. We got to 6.42 on Friday after seeing things improve here in the morning on Friday, right? We went up on the day, ended the day about the same. It was, it would look like we might be okay heading into the next week, but things are always fuzzy heading into the weekend. So there were, a lot of headlines about the lack of a peace deal with Iran. U.S. and Iran far apart in talks to end the war and reopen the Strait of Hormuz. That's it. That's the main thing, right? So bonds aren't going to improve until we actually see a peace deal. So we'll talk more about that in a minute. As far as today goes, reprice risk is moderate. It's always at least moderate right now. But it's on the low side of moderate. Friday was a good day. We didn't see any reprices. There was nothing to worry about. This morning, the action is early. You could actually already see we had overnight trading. That was this first step down. And then at 8:20, when domestic markets open, you could see that things got worse and moved lower. And that's kind of where we're at this point. So we've seen quite a bit of recovery. That's a lot better than it dipped down here. But basically, that's kind of where we're at, likely to where we're going to settle the day as well. 10-year Treasury yield, 4.38. Not the worstest, but not the bestest. We're kind of right in the middle of the range that we have seen kind of, in this area here. And it really does put us kind of right in the middle, smack dab in the middle. So that's kind of where we're at as far as all of this stuff here. The outlook for locking, I would cautiously float everything. Anything closing in the next 15 days. When you look at rate sheets, we are very much ebbing and flowing between the basically 6.25 to 6.5 ish range. I mean, 6.29 has been kind of our lowish point. Basically 6 3/8 to 6.5 is even more of a kind of a tighter range that we've seen. And I mean, this is the entire month. We've been this way since February. In fact, if we go ahead and take a look, let's take Mortgage News Daily. And again, just for consistency, your rates may vary, but for consistency, we can take a look at this, right? And, we could see that since February, these were our worst levels of March 27th, the highest that rates got. Before everything broke out with Iran, we were down here, testing the sub-6 range, which was our best area. But really, we've spent a lot of that time since things have gone up. We can kind of really, we've been in this range right here, and that's kind of where we're staying. And right now you can see, once again, we're kind of in the middle of that range. Will we go up and touch the top of the range? This is when rates were at their worst. Probably not. Not without any kind of military escalation, and hopefully we don't see that. Even with the little skirmishes that were going on over in Iran and in the Strait, they were attacking some ships, we were attacking them, but all of that stuff taking a bit of a backseat. Oh, it's not letting me change this. Hold on a minute. Let's stop sharing. There we go. Now I can tweak the camera so it's not zoomed in so much. There we are. Okay. So anyway, taking a look back at this stuff, I mean, I think we're in a pretty good spot, as best as we're going to be until all this stuff gets done. Markets are fatigued. Consumers are fatigued. Everybody's fatigued. And again, I know that I've got some people on that respect me and don't want me to talk bad about Trump. I don't know, man. There's just this whole thing just kind of drawing on and drawing on and drawing on. We'll see. But can't blame him for wanting to at least make sure that we try to end the nuclear threat from Iran. That has been the overarching emphasis, that we've had through the whole thing, is that they were close to being able to be a threat to the U.S. With nuclear. So everything they proposed was reasonable and generous. Iran's foreign ministry spokesman Esmail Baghaei said, I don't know if I'm saying that right. Trump rejected Iran's response, stopped short of declaring a resumption of fighting. This is where you see a lot of the media really kind of hype this shit up. Stop short of declaring a resumption of fighting. Like, don't put words in his mouth. He never said anything even close to that. And for Trump, his response was actually like very low key. I don't like it. Totally unacceptable. He didn't say they were going to bomb him back into the Stone Age or anything, and he's said shit like that before. So you got to be careful. But traders, the key here is not about Trump. It's about the idea of what are traders doing and where do they think things will go. It does not look like we are close to a deal, but it's never going to look like we're close to a deal. Both sides playing everything very close to the vest. Neither side wanting to give up anything in negotiation or leverage, and they both always sound like they're 2 steps away from just, throwing in the towel and walking away from the whole thing. Yet here we are weeks, later, still a ceasefire. Both sides have a lot to lose. We've got, fatigue on oil and gas prices here in the U.S. We also have midterms that'll be coming up soon. And the longer this drags on, the harder it'll be to recover from any negative spin. And then, I'm sure that Trump and the administration is going to be getting a lot of pressure from other countries that are in a much worse situation due to the oil problem, the lack of oil getting through the Strait of Hormuz, like Australia, and countries in the UK, in Europe, including the UK, Germany. But I mean, that's, you're going to see a lot of pressure there. And as far as Iran goes, they act like they can do this forever. Both sides act like they can do this forever, but they can't. They're definitely, the blockade was, I think, one of the best ideas in, counteracting that Iran could not dictate alone the Strait of Hormuz and get their ships in and out while everyone else, was struggling. Now everybody is hurting. So This will eventually get done. And that's why for loans that have more time, 15 to 30 days, we're also cautiously floating, because when you look at what's happened with rate sheets, they do stay within a certain reasonable realm. Hold on, let me swing this over. Right. They're staying within this reasonable realm. As low as we've gotten here, at the bottom in April. And then we're kind of in the middle of that range right now, as high as we were the other day. And there's a good chance that we could go up and touch that again, if things continue. But they do come back down. And it really, we're not lasting at these higher points for that long. Notice that we peak, and then we flow. We hit a peak, we drop back down. We hit a peak, we drop back down. So really, the hiccups. What does Siegel have to say this morning? Let's see what you guys all have to say. No skirmish. POTUS says they are love taps. Hey, at least that I have fun with that one. At least he's, if that's what he says, at least that. What's up, Doug in Germany, dude? What time is it in Germany right now? I'll have to Google that and see. Hope you're having a great trip, my friend. We'll chat when you get back. All the stupid redistricting will help POTUS in the midterms. No one is speaking about. No, they're talking about that a lot. There's a lot of talk about that, but I'm not political commentary, so I won't go too deep on that one. No one, if China works on Iran, that can help the U.S. in rates. U.S.-China meeting very soon. Yeah, they're meeting on Wednesday. Trump meeting with China on Wednesday. We'll see where all of this stuff goes. Can it help? Yes. So we'll see. But because China is now going to be struggling if they're not getting, but that's also going to put pressure on Trump too. That's what they're going to do during their time. So Iran dismisses Trump's criticism of latest proposal. And this is the he said, she said stuff that we're going to continue to have on this for a while. Oh, 3:45 p.m. Oh, cool. It's funny because you're usually up so early. So anyway, so this is all the same stuff we got going on. We'll see. We'll see how it goes. But you look for your good days right now. Look for the opportunities. I wouldn't be locking anything today. It's not a good day, but it's not a terrible day. That's kind of where we're at on it, especially anything that's got more time. Anything's got more time. If we can catch something where all of a sudden we wake up and it's like, hey, we've got a deal and they're kicking the can down the road for some things, which has been talked about, but they open up the Strait of Hormuz. Well, that'll be a big deal. It's all about that Strait of Hormuz, baby. Once we can get that oil moving and everything else moving, that's going to be a good thing. So Iran dismissed President Trump's apparent rejection. You can't fire me. I quit. It's all funny. It's all just jockeying and everything else. This is interesting though, that they talk about the absence of the supreme leader who's been out of the public eye since supposedly being injured back in, I think it was in February. So, we will see. We'll see where this goes. So, but anyway, that's it, my friends. Not really anything else to ramble on about. I see there's many of you on today. Appreciate you being on. Tomorrow we've got CPI inflation data. If anything is going to have some kind of an effect, it's going to be the CPI data. Tomorrow we also have bond rollover, but that doesn't matter. Wednesday we've got the PPI, producer price index, wholesale inflation. That's definitely it could play a blip for the morning for the initial when it comes out, because we've seen that wholesale inflation is definitely getting pressured with oil prices, transportation prices, fuel prices, all that stuff. We also have retail sales coming out on, let me see, is that Wednesday or Thursday for retail sales? I think, hold on, let me look. I think retail sales no, it's not Friday. I think it's Thursday. Let me just double check here. Hold on. Economic calendar. Yeah. So this week we've got CPI tomorrow. We've got PPI on Wednesday, retail sales, jobless claims on Thursday, and then Friday will just be a quiet day. So those are the things that could have some effect. Randy said, how does today's outlook vary from Friday's last? It doesn't really very much. Again, it's the same thing. We're going to continue to see headlines that make it sound like everything is about to fall apart. They want clicks. Let's not forget that the media is not just to give us information. The media is about money. And the headlines are spun in a way to produce clicks. So it's always a to be continued, on the edge of your seat. They make it sound like, like the whole thing's going to fall apart. And both of the parties are trying to maintain leverage, so they're not giving in on anything either. So it's not like they're like, oh yeah, something will get done soon. Like, there's no positivity coming from that camp, from either side. So that's how the outlook is. Like I said, you're gonna see, like, this week, we could see rates go either way. You're going to see them go, up a little bit, creep up a little bit to some of the worst level, or down a little bit. We're right in the middle of that range, and that's what we're doing, is we're free flowing in that range, and that's based on trading and different things. If the CPI inflation data tomorrow surprises, it could hurt, but the reality is everyone's expecting higher inflation. I've talked about this before, that there's really no reason to expect the Fed to cut rates anytime this year. Let me pull this up on the screen. We'll share that real quick, and we'll kind of wrap up on that one. But when you look at the Fed futures, it's a 95% expectation that everything will remain the same heading into the June meeting, heading into the July meeting. There's still no difference. When Warsh takes over or not, nobody's expecting anything to really change. September, very little difference, right? What you'll notice is nobody expects rates to move higher until possible rate hikes. Look at this. Once we get to December, all of a sudden, this is a rate hike. This is a hike right here. So it's it's funny that markets are thinking that maybe heading into 2027 we could see rate hikes. Much less of a chance of a rate cut at the moment, more of a chance of a rate hike. But that ebbs and flows too. And as you get into January, it increases. Now you're at 21%, right? March. Now you're at 28%. So markets are expecting the Fed to be in a position to raise rates, not cut them. No matter, if Warsh was put in under the guise of, executing Trump's desire to cut rates, there's no reason to cut rates in this environment. Until we see, the last labor report, it came in fine. Unemployment 4.3, more jobs created than expected. That didn't really hurt us on Friday. But, there's certainly no reason to see the Fed have to cut rates. And we're going to see higher inflation. That'll come in tomorrow. And that's going to push the idea of rate cuts even farther out of there. So, and again, it's not that the Fed, when they cut rates, that mortgage rates will improve, but it's all kind of in lockstep. What would encourage the Fed to cut rates is also what helps mortgage-backed securities and, pushes yields down on treasuries. So, it's not an outlook that I think we're going to see anything on that. Ron said the media doesn't care about news any longer. Yeah, no, I don't disagree. The only purpose of media is to get ears or eyes to the commercials. The only purpose of content. It's not to provide good or accurate info. What's scary, Ron, is not only do I agree with you, but when I look at the headlines in like the Wall Street Journal and stuff, it becomes more and more apparent. It's so hard to sift through relevant information and find things. That's why you got to look at all these stupid different places. Reuters, Bloomberg, Wall Street Journal, Barron's, CNBC, looking at all of these just to find who's actually follow. Ron says, since when does the Fed need a reason to cut rates? That jobs report was weak. Yeah, now I know what you're saying when you dig deeper on it. But it's not weak enough. We've been saying that for a year and a half, that it's weak, but it's strong enough that it doesn't require any kind of, and I don't think that a Fed rate cut is really what's needed. I think part of the reason that jobs are where they're at is we're experiencing that AI revolution right now. And that's having a big effect. So, do you see Sophia over there falling off? She's a goofy cat. But I got to tweak my hat a little bit. I think I'm going to steam it and roll it and curl a little bit more. I don't have to get us quite the curl that I like, but still liking my new hat. So, all right, my friends, I'm out of here. You guys have a fantastic one. We'll see what tomorrow brings. We'll see what the CPI. Join me tomorrow. We'll talk about what's going on with CPI inflation data. We'll see if anything changed today, if we had any reprices, if anything changed in the outlook, but I don't think it will. So I hope you'll join me tomorrow. Same bat time, same bat channel. Take care, everybody. Bye-bye.